In this episode of Smart Money Atlas, I am going to teach you all you need to know about Ichimoku. The Ichimoku Kinko Hyo, or Ichimoku for short, is a technical indicator that is used to gauge momentum along with future areas of support and resistance. It was developed in the late 1930s by Goichi Hosoda, a Japanese journalist who spent 30 years perfecting the technique before releasing his findings to the general public in the late 1960s. Ichimoku is a moving average-based trend identification system, and because it contains more data points than standard candlestick charts, it provides a clearer picture of potential price action. The main difference between how moving averages are plotted in Ichimoku as opposed to other methods is that Ichimoku's lines are constructed using the 50% point of the highs and lows as opposed to the candle's closing price. Ichimoku takes into consideration the factor of time as an additional element along with the price action. Now I am going to explain key elements of Ichimoku. First line is called Tenkan-sen or conversion line and showed as blue line. It is primarily used as a signal line and a minor support and resistance line. This is the turning line and is derived by averaging the highest high and the lowest low for the past 9 candles. The Tenkan-sen is an indicator of the market trend. If the blue line is moving up or down, it indicates that the market is trending. If it moves horizontally, it signals that the market is ranging. Next line is Kijun-sen, which is derived by averaging the highest high and the lowest low for the past 26 candles. Also called the base line and showed as red line, this is a confirmation line, a support and resistance line, and can be used as a trailing stop line. The Kijun-sen acts as an indicator of future price movement. If the price is higher than the red line, it could continue to climb higher. If the price is below the red line, it could keep dropping. Next stop is Chikou Span. It is the last closing price projected back 26 candles on the chart. Also called the lagging span and showed as green line, it is used as a support and resistance aid. If the Chikou Span crosses the price in the bottom-up direction, that is a buy signal. If the green line crosses the price from the top down, that is a sell signal. Senkou Span A is average of Tenkan-sen and Kijun-sen plotted 26 periods ahead. Also called leading span A, this line forms one edge of the Kumo cloud. Senkou Span B is average of highest high and lowest low over the past 52 time periods, and plotted 26 periods ahead. Also called leading span B, this line forms the other edge of the Kumo cloud. Finally, Kumo cloud. Kumo cloud is the space between Senkou Span A and B. The cloud edges identify current and potential future support and resistance points. The Kumo cloud changes in shape and height based on price changes. This height represents volatility as larger price movements form thicker clouds, which creates stronger support and resistance. As thinner clouds offer only weak support and resistance, prices can and tend to break through such thin clouds. If the price is above the Senkou Span, the top line serves as the first support level while the bottom line serves as the second support level. If the price is below the Senkou Span, the bottom line forms the first resistance level while the top line is the second resistance level. That is it for this episode of Ichimoku Basics. Tune in for next episode that is going to be more advanced Ichimoku strategies.